Hi guys, I welcome you in this video. So in this video I'm just going to be showing you some things that we need to fix when it comes to price action trading. You see, price action is interesting when we do it the right way. So this video is just gonna expose some few mistakes and how we are gonna fix them and really improve our trading or our analytical skills, né? So let us just get started without any waste of time. So the first thing that you need to know when it comes to price action traders, excuse me, is that price action is really interesting, but the most common mistake that us traders do, it is actually relying mostly on our trend line, né? Because price action is just based on support and resistance and then trend line trading as well as patterns, and then if you want to add candlesticks you then add them. So that's what formulate price action. So but then our problem when we trade with trend lines is that we then rely mostly on our trend lines which are drawn. We expect price to come and react from our lines, which is something wrong. But instead of you focusing on trend lines, that's why even a lot of people, they're even obsessed on where to draw our trend line. Should we draw our trend line on the candlestick wick or on the candlestick body? Why? Because we guys, we are focusing on the wrong thing. We are focusing on the line. Where should the line touch? The line is supposed to be accurate. So when I draw it like this and then all of a sudden price doesn't come and touch that line, we find out that a lot of traders will miss this opportunity. They will miss this opportunity. Why? Because they were only relying on the line. So one important thing is that you should never rely on the line, but what you should be doing, this trend line, when you draw it, it should be there to show you the slope of the market or the strength of the market, né? I'm just gonna cover that quickly. So what you should be looking for, you should be looking for in an uptrend, you should be looking for a discount. In a downtrend, you should be looking for an increase in the price. You should be looking for an increase in the price and then focusing on that increase being broken. For an example here, you can see that we had an impulsive wave and then boom, a corrective wave, which was in a form of a pattern, because that's how corrective waves approach. They're always in form of patterns or in form of a certain market flow. So here you can see that it was in a form of some sort of an ascending channel, né? Let me just draw it like that, and then let me duplicate it and put it on the side. So here it has formed a flag pattern, né? So your focus or your main focus should be the pattern in the corrective wave, not actually focusing on price reaching this line, né? This line is here to show you the strength, né? You're gonna understand it in a short period. So you should be focusing on the corrective pattern and then focus only on the break of this pattern. When this pattern is broken, and you should make sure that the minor waves inside this pattern, they then show you power on the downside. For an example here, you can see that we now had a high which is lower than the previous one, and again the lows were becoming lower and lower. So it was a good sign that indeed the sellers were coming in, and again we had a good confirmation, which is the retest. So then it was good for you to press the sell instead of waiting for price to come and bounce in that line, because prices don't always bounce in trend lines, né? That's why we are getting things wrong, because we are only relying on price coming to touch our trend line. Same thing applies when you are in a horizontal. When you are in a horizontal scenario, you shouldn't always wait for price to exactly touch your line or your support and resistance, because sometimes price bounces before, sometimes price bounces above, just like that. But these lines or these resistance and support, it should be zones, it should be zones that around this level, that where I'm paying attention. Around this level, that's where I'm paying attention. So okay, now let's get to the critical part, which is the market shift, which is the market shift. This is one thing that really kills a lot of retail traders. It is the fact that they confuse breakouts with market shifts. As I always say, that market will always shift in terms of strength, just as everything does. Even when a car moves, it will sometimes move fast, sometimes it will move slow depending on the rod. So same thing applies. The market, how it flows, it usually shifts. The market flow usually shifts in terms of trendline trading depending on what is happening at the market in that time. So what traders will do, they will mistaken this as a breakout, and they will tell you that now sellers sellers are exhausted and now it's buyers coming in, so we should be pressing the buys, which is something wrong. What you should know as a trader is that a trend will never move at the same strength forever. A trend will be aggressive and then becomes a little bit slow, maybe continue again and be aggressive. So it doesn't move in one flow forever. So what you should be doing is that you should make sure that you don't mistaken a breakout with a change of market flow. And your trend lines, if you're drawing them, they should be trend lines which are always shifting depending on what the market is doing. That's why they say the market is always right. We should follow the market. So make sure that in everything that you do, you are always following the flow of the market. If it happens that you think that it's a breakout will only be valid when we now have two things. When we now have a new high and a new low, which is definitely in harmony with the breakout that you are detecting. For in this case, it should be a higher high and a higher low. That's why you shouldn't be in a hurry to take breakouts, because when breakouts come, they resemble a change in direction. I'm trying to find a shift from an uptrend to a downtrend. Let's just make an example with this case. When let's say there was an uptrend, when a breakout comes here, it resembles a new market move. So you shouldn't be in a hurry that I wanna sell here or else I will lose this opportunity. No, you should wait for the right time as possible. Wait for the structures to confirm that now it's indeed the beginning of a new move. So if you see this as a breakout, there is no need for you to press buy. Wait for these new market flow confirmations to be to appear. Have a new high which is higher than the previous one. Apart from that, then have a new low as well which is higher than the previous low. Then you are gonna proudly say that, okay, now this is a breakout. So I hope that one is making sense. This is something that is very crucial. You should make sure that you observe the movement of the price, not actually just placing lines, drawing lines, and then thinking that price is gonna observe or obey those lines. Check on price action. That's why it's called price action. Look at what the price is trying to tell you. Look at what the price is trying to preach to you. Focus on the candles. Focus on the formation. Focus on the highs and the lows. What are they trying to tell you? Try by all means to interpret the message of the candles even without plotting any line. Just looking at the price just as it is. And sometimes it even helps to just look at price without even plotting the lines before you can plot the lines. Try to look at the price purely as it is. See that, okay, this is a corrective, and this corrective is now becoming broken. It means that I should be looking for selling opportunities, because the buyers who were posing the flow, they are now defeated again. It means that it's a new time to really detect the downward move without even drawing lines and connecting everything for you to say, no, it's now a downtrend. No, just focus on what the price is trying to tell you. So thank you guys. I hope this video is helpful. Remember to like, share, and subscribe.